All right, everybody. It's Matt Santagapita. I'm here with Dale and Cam from the Santa Cells Houses team for a longer than normal Monday market update. On this episode, we are going to recap what's going on in the past quarter. So I guess let's just jump into this past week's numbers and then we're going to talk. So this past week, we saw new listings coming in at 215, conditionals coming in at at 18, and solds at 191. So Dale, we're going to kick off the quarter review and kick it over to you and say, what happened this past quarter in Q1 of 2021?
So in this past quarter, we've seen our average and median sale prices climb. So back in January, a couple months ago, 3 months ago now, the average home sale price was 620, where our median was 600,000. So we've actually seen that over the past year and also this quarter, that gap is closing. So just to back up a little bit, January of 2020, we actually had a gap between our average sale price to the median sale price of about $90,000. And in March of this year, that's only about $17,000. So that gap has shrunk, which to us is an indication that it's harder to find homes in that lower price range. They're disappearing, or call it they're climbing, right? So as we were discussing earlier, kind of your single detached entry level home in an older neighborhood is probably starting around 400,000. I know there's debate on that. Quite often it's closer to 450, 500,000. However, there's still the occasional one out there. So we're also seeing the average list price to eventual sale price has been around the 110%, meaning places are selling about 10% above listing price. Most of the reports I've been running in the last couple months have shown kind of a range of 10 to 15% above asking price is where the sale price lands. So again, it depends on the neighborhood, the initial starting price, and the type of home or condo that you're looking at as well.
Cool. And so Cam, what are you seeing in the market?
Unprecedented levels of demand. Everyone and their mother from here to Ottawa wants in on the real estate market. In London, it seems like we are the belle of the ball since the start of 2021. London is hot, and it's not looking like it's going to stop. The narrative that prices are only climbing because of restrictions as far as supply, that's completely false. We've seen record-setting levels of inventory over the past 2 months. We still are in an imbalance, though, as far as supply versus demand. Supply has gone from here to here. Demand has gone from here to the stratosphere.
And so what's driving that demand?
I think there's a high demand on internet feed as well these days.
Yeah. Toss it over to you until we get Cam back from who knows where. What's driving demand?
So there's multiple factors, right? So we're still seeing a lot of people coming out of the GTA, and in various scenarios there. So sometimes you have baby boomers that are retiring. They're selling their bungalow there for $1 million. They're buying the same thing here for $500,000. Or you're getting investors that they're looking to get an investment property, and London is just way more affordable, and the rent still makes sense as well for an investor. And then you've also got people that are renting in Toronto that just can't afford to purchase. So some people say, you just drive until you can afford to buy something. So that, London's 2 hours west of Toronto. So the further away from Toronto you get, typically the cheaper places get. So a lot of people are landing here because it's still a major city. We've got 4 hospitals, university, college. It's a big city that's growing, right? So we're getting a lot of demand from those investors. Last year in 2020, we also saw with the pandemic, the government slowed down or stopped immigration. And this year they're supposed to be ramping it back up again. So all those people need a place to live, right? So
how do you, well, let me ask you that. So a couple things here. Once we open up immigration again, so once, and like really open it up, I mean like real normal numbers start coming back into Canada, how do you think that's going to affect the overall market in both, I guess, call it the province of Ontario and as well in London itself?
So I would say the bulk of them for province of Ontario, will end up in Toronto, maybe Kitchener, Hamilton, Waterloo, those areas. London definitely gets a good share of them as well, though. So as well as some of the rural and smaller towns also. So what we've been seeing is a lot of Asian and Middle Eastern immigrants coming here, and a lot of them seem to have fairly deep pockets for purchasing homes. That's not always the case, of course. Some of them are looking to rent, and maybe that's a temporary thing for 1 or 2 years until they establish themselves here and see where they like, right? Like maybe they'll move to Toronto and they don't like it, so they'll find a smaller city nearby where maybe they have some existing friends or family that they know the area. So yeah, it definitely causes a ripple effect too, right? Because when you get people moving into GTA or then moving from the GTA to London, sometimes those Londoners can't afford or don't have as deep of pockets to compete in multiple offers against some of those people that might have sold a $1 million home and are trying to buy something for half the price here. So then it's a bit of a domino effect down the 401, right? Where Londoners then are often going to some of the smaller, quieter towns like Thorndale, Lucan, Dorchester, St. Thomas, Strathroy, Mount Bridges, just because it's easier for them to buy something there and probably slightly more affordable as well.
So, okay, Cam, thank you for jumping back on.
Hi.
I'm going to kick it over to you for that. Are these surrounding areas much more affordable than London?
I will say they are more affordable. They are no longer much more affordable. If you think about neighborhoods or areas like St. Thomas, Elmer, Dorchester, Kilworth, Kamoka, Ilderton, Lucan, Thorndale, all these places that basically circle London, they are no longer a big secret. You're not finding too many deals out there. Sure, if you're comparing apples to apples, let's take a 1,500 square foot bungalow built in the last 10 years somewhere in London versus one of those other areas, it will be cheaper outside of London. Not as
we're not talking half the price.
Right.
Yeah.
So a lot of people are not also they're smaller areas. So your inventory available is not nearly as big as it is within the city of London.
Mm.
So, how much of an easier time are you finding? There definitely is still going to be competition. Your money is going to probably get you what you really want, but you're then outside the city. So trade-offs, right? I wouldn't argue that you're going to have a much easier time actually buying something. Your money, like I said, you'll still be able to afford what you want, but it could still be a challenge.
Mm-hmm. Cool. And so, Cam, when we were talking earlier, you had some interesting numbers that you were saying
Sure.
to throw at us that you weren't going to kind of prepare us for, but just some of the things that you've been seeing in the market. So why don't you hit us with these?
I think it's shocking.
Numbers.
I think it's shocking. Last month, okay, so we'll go our average sale price for March, $632K. That's just London.
Yeah.
And
average home price.
Yes, that's across everything. That's your 1-bedroom apartment all the way up to your 6-bedroom, 5,000 square foot new build, right? That's everything.
And I just want to stop you there because I know, I want to stop you, but I just want to say, how much has that changed over the past year?
41%. Yeah. So 2/5. You basically added 40% to the pile. I mean, it's nuts. But I mean, that's pretty consistent, like year over year gains, January and February. We're along the same lines, not so much in February, but January was at about 40%. To me, these are the most shocking numbers. Last month, 1,111 new listings in London. That is a 1 month record over the past 10 years for March. Okay, so that's the highest number of new listings we've seen in the month of March for the past 10 years. And that was up 28% from last year. And that's pretty wild because March of last year was going to be a very strong month until, March 17th, we shut everything down basically. So we lost almost a quarter of the month once all was said and done as far as new listings went. Last month, also another record, 901 sales in March, which again, a record for the month of March over the past decade. And that number was up 53% from where we were last year. So, and like, we had a low sale number last year. So we basically had half a month. But even then, 2017 was the busiest year in the past decade for London real estate sales. And March of 2021 was up about 8% from March of 2017. So, like I said earlier, it's, normally you'd say prices are skyrocketing because we have really low inventory levels, right? Demand stays the same. If inventory goes down, price goes up. But inventory and sale numbers, records.
Yeah.
And prices are still going up. That only indicates to me that like we're seeing 2 to 3, I would guess 2 to 3 times as many buyers in the market today than a year ago.
Yep. I would agree with you. It's interesting because the general consensus out there outside of real estate is people think we don't have inventory. We have lots of inventory. We have a tsunami of buyers that are coming in from, again, it's like from all over, whether or not it's someone looking to pick up, whether it's like household creation, if it's retirees moving into this area, to immigrants or newcomers to Canada, or even just investors. That's the other one that I will say that shocks me. How many people from outside of London are looking to invest in real estate in London? That's been a shocker.
I would bet that between Dale and myself, we probably talk to 10 people a week that message us saying, I want to invest in London real estate.
And I guess, okay, so let me pose this. Why are they interested in investing in London?
Return on their money.
It's a lot more affordable here too, right? So it's not only GTA people that are reaching out for that. However, I'd say the majority of them are.
Yeah.
It's just way more affordable numbers wise, and the rent comparatively it makes a lot more sense, right? So like Cam said, return on investment makes more sense here than buying in maybe Kitchener or Toronto for sure.
Mm-hmm. The other thing too, I was talking to a friend of mine who works for the city, and he mentioned that our municipal government is way more lax on permits for multi-res type buildings. So
really
in Toronto, it's very, very easy to find almost well, that's a lie. There are a lot of illegal basement apartments in Toronto, right? Everyone in Toronto wants to have income attached to their property.
Yep. And
that trend is coming our way. And people are trying to get in on the ground floor, literally the ground floor of that trend. And it is way easier to build something like that in London than it is in Toronto. So I think that we're seeing a lot of that interest because people are just there's so much red tape to go through in the GTA to try and build something like that, which is why you end up with a lot of terrible illegal apartments.
Yeah. In London, we have the sweeping hole, like granny suite.
Yes. And
which makes
secondary dwelling unit.
Yeah.
A lot of these new build homes that are being built are built with the capability of turning that basement into a rental suite. You know, they've got rough-ins for kitchens and HVAC, and really all they have to do is come in and finish it, whether or not they get a building permit to finish that and then rent it out. There's just so much building happening in London right now. It's really easy to make that happen.
Cool. So one other topic I want to hit, you guys all know what it is, because this seems to be becoming more and more of a trend of conversation in the media, is, are we going to see a housing crash in the real estate market? And let's just say whether or not, like, let's talk about whether or not it's Canada or London, like, just let's make it just one general conversation here. What do you guys think?
No. I'll say no. Very definitively, I don't think there's any reason that we might see a crash. I mean, define crash. Do we lose, like, all these sensationalist headlines? Housing price is going to drop 40%. Yeah, you're just putting that out there for clicks.
Yeah, let's just say a housing market crash would be prices plummet by 40%. A pullback maybe 5%, but yeah, like, let's talk something extreme over 25% in a short period of time, call it 1 to 2 quarters.
Not gonna happen.
I would agree with Cam. I would more say that the larger cities, you know, Vancouver, Toronto, Montreal, they could see a depression in some of their sectors for a little bit of time. And Toronto already did see it a little bit, but then once it dips to a certain point, people start seeing value and it starts to climb again.
Yeah.
Right. So right now, a lot of people are trying to get out of the densification of the larger cities, try to get into smaller cities and towns and rural areas. So I think for a few years, at least, we're going to see people exiting those larger cities and trying to get into the smaller, more affordable areas. I think at some point we will level out in pricing. I don't think we will drop.
Yeah, I will add a caveat to my comment. This is barring some type of moronic policy brought in by the government at whatever level to help us regulate the housing market.
Yeah, I'm going to say I agree with you guys. I mean, we talk about this quite a bit, and you know, my thoughts on it. You would need something that really jars the market at this point, and that's not a, you know, like interest rates, for instance. Interest rates, okay, are they going to jump up, 2, 3, 4% overnight? Probably not. That would be jarring the market, and that would obviously cause some problems. But, at some point, like, if rates do go up a couple percentage points, well, it's going to happen over years, and it's going to be phased in, and that will probably over time create some calming of the market. The only other thing that I can see is, again, a jarring interest rate mechanism put into place, which I think would be lunacy for any government to do that now. And then obviously the way, like what we've talked about, if you see unemployment go into double digits, 25%, and there's no stimulus that comes around to kind of get people back to work. Okay, well, yeah, then you got a problem. But I don't see that happening anytime soon.
With the rollout of the vaccines, I don't think that we're at risk for that type of unemployment. I read a couple articles that said that, the outlook on employment rates is pretty bright, heading towards the end of the year. I mean, if we didn't head into 25% unemployment last year, I think we're probably in a better, more prepared position this year to keep the ball rolling in the employment sector. Yeah, I think there would have to be something serious to happen to the psyche of the buyer pool, right? If some new taxes rolled out where it was less enticing to invest in real estate or own real estate, then that would be detrimental. But I think that goes against, the idea in North America that owning your own home is is really a prized position to be in, whether or not that's right or wrong. That's kind of ingrained into our culture as North Americans or Canadians specifically.
Mm-hmm. Awesome. All right, guys. Well, why don't we wrap this up? Any final thoughts about, I guess, the housing market going forward? If anybody's got some crazy wild prediction they want to throw out, let's throw it out. Or any kind of final comments on the past quarter that we've seen?
I would just say my prediction moving forward is we're going to continue to see the same thing we've been seeing for the last 9-10 months of craziness, which really has been 5 years of it. Last year seemed to escalate as well as the first 2-3 months of this year as well. So I think that's going to continue for, I'm going to say 2 more years. I feel like I've been saying 2 more years for the last 5 years, and that timeline just keeps getting pushed out. I just don't see an end in sight right now.
Yeah, I've got a prediction and a comment. First, my prediction. I do not think that we will surpass in London 660 as an average sale price. I don't think we're going to hit it before the end of the year. I think, we're at 632 right now. So I don't think that we're going to see a massive jump from where we're at right now before the end of the year. Okay. I think that I feel pretty safe in that. So 660, I don't think we cross that threshold by the end of the year. Last, a comment. If you are a home buyer in London or Ontario right now, and you are struggling to find something that you like, that you can afford, guess what? It doesn't exist. If you can afford this and you want this, it's not going to happen. A lot of what's like these rising sale prices over the last month, we've talked about record levels of inventory. Everything has been available, right? Dale, you showed a church yesterday. Someone was looking for a church. It was there. If you there are just certain price points that are not going to get you what you thought you were going to get anymore. Okay. So either adjust your expectations and understand that the real estate economy or the real estate market doesn't owe you anything as a home buyer, or save up a lot more money going forward.
That's tricky too, though, right? Because then you're chasing when prices increase.
Yeah, I would agree.
30% last year. It's buyers have trouble saving a down payment that fast.
Yeah,
right?
I don't think that's not the route to go. But at the same time, stomaching where your money's going to go right now might be difficult for other people to understand as well.
So just to add to what Cam said, I mean, it's maybe a little blunt and the harsh reality of the market right now. However, there's still opportunities out there for you to get into a townhouse, maybe a smaller house than you were initially hoping for. That way, though, at least you can start building some equity and get into the housing market. And then in 2 to 5 years, you can hopefully upsize at that point once you're more established.
Yeah, that's the whole point. Get into the market, accept where your money will take you right now, and make it happen.
There you go. Advice to take to the bank. All right. Well, I guess we've wrapped up the Q1 2021 Monday Market Update. Again, it's Matt Santagapita from the Santa Sells Houses team with Dale and Cam from our team. Feel free to reach out to us if you have any questions. I know myself, I've in the past week had a huge uptick in people asking questions. Anyways, again, it's Matt Santagapita with Cam and Dale from the Santa Sells Houses team. Have a great day, everybody.